So the dollar's overvalued right now. If you devalue the dollar, how do you do that? Some of you may have heard that the Trump administration has talked about creating a sovereign wealth fund. What happens when you take lots of dollars, sell them to buy other currencies to go buy and invest in other countries? The price of the dollar goes down. What currency is our debt denominated in? Dollars. How do you get the debt to go down? You make dollars less valuable in the world. Those of you who earn W-2 income, those of you who do not hold real assets, those of you who do not hold Bitcoin are the ones who will suffer from that.
Fred Thiel opens with a sober analysis of the shifting sentiment toward the U.S. dollar. Historically, the dollar has held a position of supreme dominance as the global reserve currency. This has allowed the U.S. to maintain economic hegemony and enjoy unparalleled geopolitical leverage. But things are changing, and fast. Countries across the globe are becoming increasingly wary of the U.S. dollar. Why? A combination of growing U.S. debt and the overt weaponization of the dollar in international sanctions has shaken confidence. Sovereign nations are actively decreasing their exposure to U.S. Treasury bonds. A clear sign of this change, one of the largest buyers of U.S. Treasuries today isn't a country, it's Tether, a private stablecoin company.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So the global economy has operated with a very high dollar dominance. With the current level of U.S. debt, the previous weaponization of the dollar, the global economy is very scared of dollars, right? The international sovereigns have decreased their buying of U.S. debt. The sixth largest buyer of treasury bills today is a stablecoin company called Tether. And the U.S. government is very scared of the world going away from the dollar. And so they want to ensure dollar dominance. You know, President Trump said he wants the BRICS countries not to abandon the dollar, right? So if countries are moving to own lots of Bitcoin and trade in Bitcoin, the US has to have a lot of Bitcoin and they have to hold a lot of hash rate, because Bitcoin mining, I think, is this big misnomer. We should really rename it. It's called Bitcoin transaction processing and Bitcoin network security. Two different functions, right? Because if the rest of the globe has 80% of the global hash rate, well, people transacting in the US with Bitcoin may be locked out of 8 out of every 10 transactions, or 8 out of every 10 blocks. And so it becomes of strategic importance for the US to have a lot of mining inside the country. To do that, we have to have much more liberal energy policies. We have to fix FERC and permitting and all these other things. But the US also has to build a very big strategic reserve of Bitcoin, because we have a strategic oil reserve not because we're short of oil in this country. We pump more oil out of the ground here than Saudi Arabia does. We have lots of gold in Fort Knox, not because the dollar's backed by gold. That ended 50 years ago. We have gold in Fort Knox, so if there's an attack on the dollar, the US government has a way to defend the dollar. And it's not something they talk about a lot. We have a strategic petroleum reserve so the government can control the price of oil domestically, which is what President Biden did not too long ago. So we need a strategic Bitcoin reserve. Other countries know we know that. They know it, and they're starting to buy. And even countries where before there was a belief that Bitcoin is this bad thing are waking up to the fact that they need to hold some Bitcoin to make sure that they're not left out of this game, because the US government's intention is to inflate away the debt. And by that I don't mean let inflation run rampant. They want the dollar to devalue. Right, the dollar index today is trading at about 1.06, right? It should be down at about 100 as it's called, right? Which is a even par to where it's been historically. So the dollar's overvalued right now. If you devalue the dollar, how do you do that? some of you may have heard that the Trump administration has talked about creating a sovereign wealth fund. What happens when you take lots of dollars, sell them to buy other currencies to go buy and invest in other countries? The price of the dollar goes down. What currency is our debt denominated in? Dollars. How do you get the debt to go down? You make dollars less valuable in the world. Those of you who earn W-2 income, those of you who do not hold real assets, those of you who do not hold Bitcoin are the ones who will suffer from that. And other countries understand that. The bulk of foreign countries' reserves are in dollars. If the US is going to take the dollar and devalue it, the last place they want to be is holding a bunch of dollars that are getting worth less every day. And so the only solution is something that is not controlled by central governments, and that's called Bitcoin. If China were to go all in on Bitcoin, right, that would be scary for the Bitcoin world. So you need to have gold, you need to have Bitcoin. But it's really interesting. So the US has been repatriating a lot of gold from offshore. Right? And this is kind of the reverse of what happened in the 70s when France was sending battle destroyers to the US to go pick up their gold and bring it back to France. Because there's been a really interesting arbitrage play between the price of gold in Europe and in the US. And gold is physically hard to, I don't know how many of you have ever picked up a gold bar, but and you can't cut gold bars into pieces and make it fungible. And so gold is kind of still an instrument that sovereigns look at as an asset to hold. Bitcoin is becoming more and more interesting as an asset to hold. And so over time, what's going to happen is Bitcoin will start becoming much more interesting. And the biggest difference for sovereigns between Bitcoin and gold, other than the practical matters, easy to transport, transmit, hold, et cetera, it's fungible, is the fact that we keep producing gold. Right? So gold can have a loss in value because it's not finite supply, whereas Bitcoin is a finite supply.
Another key point. Gold arbitrage between Europe and the U.S. has led to mass gold repatriation. The U.S. is bringing its gold home, flipping the narrative from the 1970s when nations like France demanded their gold back. Today, nations want security, real, local, and reliable. Bitcoin fits that bill better than anything else. Fred Thiel moves into the business of Bitcoin, specifically how miners like Marathon have to think about capital efficiency. The Bitcoin halving every 4 years cuts revenue per hash in half, but global hash rate is tripling between halvings, making the economics brutal. Only the most efficient will survive.
Right? There are times in the industry where Bitcoin will go through a pretty impressive price appreciation. And you have to look at, if I'm going to invest $1 billion today, build a site, do all this stuff, it'll take me 12 to 18 months to produce my first Bitcoin. What will have happened to the price appreciation of Bitcoin in that time period? And last year, we had the belief and conviction that Bitcoin price is going to move. And so it makes sense to buy Bitcoin at $50,000, $60,000, $70,000 because it was going to run. And part of the reason we had 1.2 billion of adjusted EBITDA was because of this run up in the price of Bitcoin that we held. Had we not bought $2 billion of Bitcoin at the end of last year and in the fall of last year, we wouldn't have had that same size number. So it's really balance sheet management, and it's being really smart about how you allocate debt, how you allocate equity, and how you invest in depreciating assets. Now, here's a key thing. Most miners today that operate sites, especially if you're grid attached, you're paying 4 cents a kilowatt hour. Global hash rates, not only doubling every halving, but in between, it's most probably tripling, right? In 2023, we had a halving just because global hash rate grew. We had a halving earlier this year, and global hash rate has continued to grow. And hadn't the price of Bitcoin taken this dip, we would have been on our way to 1.2 zettahash of global hash rate by the end of this year, possibly. China has turned on mining again. Russia's mining, et cetera. It's growing. So it's really important to look at the biggest CapEx number a Bitcoin miner has are their machines, right? The infrastructure you can write off over multiple years, but 70% of your CapEx are your rigs. Well, you have to write them off over 3 years. Imagine if instead of writing them off over 3 years, you could take that miner after 3 years put it into a site where you had almost no cost energy that only runs 5, 6, 7 hours a day. You just extended the life, and you become much more capital efficient because now you're getting a much better return out of your assets. So becoming Bitcoin mining today is you have to be a very smart capital allocator, you have to be a very smart financer, you have to really know how to manage your treasury, and you have to know when to buy, what to buy, how to build. It's a very complex business. So if you think of the technology stack in Bitcoin mining, you have power management in the bottom. Then you have processing. And the reason I say that is a Bitcoin mining ASIC, it's calculating a SHA-256 algorithm. It's pretty basic. The secret sauce in ASICs is the power management and how they operate. And having the ability to leverage variable frequency as well as variable voltage. And there's a whole science to that as to why that's important. But you basically have ASIC technology between power management and compute, if you would, in the bottom. You have cooling technology because you want to have the lowest PUE. PUE is a metric of how much energy over and above the production energy is being consumed by cooling, things like that. And the average AI site has a PUE of about 1.5, which means a third of the energy that's used at the site is not calculating, it's not doing compute, it's everything else. If you use two-phase immersion cooling, you can get that PUE down to 1.1, which frees up a lot of energy for use. So the technology stack starts becoming important because people will add capacity to the point where Bitcoin mining is a break-even business, right? In a run-up, they will add capacity, and then eventually, because that's the way the calculus works, the difficulty rate will get to a point where it's kind of a break-even business. And so what you have to look at doing is how do you put Bitcoin mining into all sorts of things where the energy is free? Right, so we made an investment in a company that provisions solar systems residentially. If you think about the energy transition and the life of a solar installation on residential, you have to calculate 20 to 30 years life for the solar system. So it's batteries, panels, etc. With the energy transition, the average home, and I'll use Southern California as an example, has gas heating today. They have gas for hot water. They have gas for their clothes dryer, gas cooking. And they have an internal combustion car and maybe one EV. Fast forward 10, 15 years, especially in California, by mandate, no gas cooking, no gas heating, no gas period, and 2 EVs. And so if you put in the amount of solar capacity that you'll need in 20 years today with battery, you've got a lot of excess energy. And if you build a little bit of Bitcoin mining into that battery system, as soon as the batteries are full and the house has all the energy it needs, you just sit and monetize that free solar energy. So we made an investment in a company where we're providing the Bitcoin mining technology. And again, we're a technology company. We're not providing off-the-shelf mining rigs that we buy from somebody else. These are systems we've designed using Orodyne silicon that essentially are custom designed for this application. They run part-time, they generate hot water, and they can run for 20 years on free energy. And so this calculus of you have to update all your machines all the time because you're paying merchant prices. Well, if you're not paying for energy, you just build Bitcoin mining into everything that stores energy. And so we're really focused on that part. How do you just build Bitcoin mining into everything that consumes and stores energy so you have free energy? And then you have a highly decentralized network. You have a network that's never going to stop operating. And you have a fabulous way to accumulate a lot of Bitcoin.
Capital expenditures in mining are front-loaded. 70% of a miner's capex is in ASIC rigs, which depreciate quickly. You need to extract maximum value from these assets. That's where creative infrastructure comes in. Thiel suggests repurposing older ASICs in environments with free or nearly free energy, like solar-powered systems with battery backups that can mine Bitcoin during energy surplus. The implication is clear. Bitcoin mining is becoming a component of every energy solution. It's a tool for monetizing excess energy. That makes it not only profitable, but sustainable and decentralized. Please like and subscribe.